Hi, welcome to our webinar today. I'm glad everybody's been able to log on and hopefully call in as well to our seminar. Webinar today, we're going to talk about the Checkbook IRA. We do a lot of webinars here at Advanta IRA to educate our clients, and clients and prospects for that matter too, about the different aspects of self-directed IRAs, some of the rules involved, the different investments that are possible. But wanted to focus primarily today on the Checkbook IRA. It's a kind of an investment strategy that a lot of people have utilized over the years, and some continue to have questions on to this day. So during today's webinar, we'll primarily focus on this type of investment strategy and some of the needs to know that we feel that people need to know when they're getting into this type of investment. For those of you who are participating live today, please, if you have any questions, you can type them into the chat box on the screen. I'll make sure that I get to them if appropriate. If it's something that needs to take place offline with a conversation, I might do that as well, depending on the circumstances involved. If you're watching the recorded version of this webinar, my contact information will be at the end of the webinar. You're certainly welcome to reach out to me by phone or email to get your questions answered as well. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. My educational background, I'm a licensed attorney, although I don't do any legal work for Advanta clients. And I've been with the company for many years doing a lot of the different transactional work, helping people make their investments, whether they're buying and selling real estate or notes or checkbook LLCs that we're going to talk about today, various other types of investments. Spent the last few years with Advanta doing a lot more of the educational aspect, educational component to our company. Like I said, we believe very strongly in education, giving people information that they need to help make decisions regarding their retirement account. So I spent more of my time really focusing on that in the last few years. Just a few things to cover our disclaimer, things that we don't do at Advanta. We don't provide any legal, tax, or investment advice. We will certainly talk about legal issues today, and when we're talking about IRAs in general, you were talking about tax implications or lack thereof when you're making investments. So we certainly wade into those areas, again, to educate people on some of the potential legal issues, potential tax issues they might be encountering with their IRA. But when it comes to specific advice, we don't give that. We can appoint you to an attorney, to an accountant, a tax advisor, someone who can help you make that determination. And especially when it comes to making investments within the IRA and deciding what type of investment that you wish to make, what type of, what you're looking to do within your particular IRA account. It's important that Advanta does not, just to understand, Advanta doesn't do any due diligence on an investment or basically promote or encourage someone to make a particular investment in their IRA. It is up to the individual client to make that determination. Again, as we have questions as we go along, please type those into the chat box on your screen. Due to the number of people on the live webinar, I will not be able to take a live call-in question today, so you're going to have to email me or text me through the chat feature on your screen. For those of you who are joining us today who are unfamiliar with Advanta IRA, we are a leader in self-direction. We've been around since 2004, and the only thing we do at Advanta is to do administration and record keeping for qualified retirement accounts. So the money we hold has to be an IRA, maybe an old 401k plan, something that's considered to be qualified money. If you have a personal savings account, that is not something, unfortunately, that we can hold. It's got to be strictly qualified money. Our customer service, I think, is second to none. We have basically a concierge type program where every client gets their own representative to work with them regarding an account, so you're not calling into an 800 number and explaining yourself multiple times to different people. Anytime you have a question regarding your account, you'll have that one point of contact as we go forward. Now, three things I think I would hope that you pull away from the seminar or the webinar today. First, just talking in general about the different accounts that you can self-direct, whether you're using a checkbook control structure or not. I think hopefully we'll pull those away, and some of you, again, on the call may already be self-directing. You may even have a checkbook control already, but others may not, and for those, we'll spend a little bit of time educating on kind of a little bit on the basics of self-directed IRAs. But we're going to spend a good deal of time talking about as well kind of the differences between either having your assets held and administered by the IRA company, for instance, Advanta doing a lot of the work, versus what the Checkbook IRA gives you, kind of what the differences are in the process of making the initial investments, and also the differences going forward for individuals when they are making, basically handling the assets in their account and how that works. And we're going to cover at the end as well, and I think it's important that you take away the advantages and disadvantages of checkbook control. Some individuals, some companies out there will promote checkbook control as a panacea, as just the end-all be-all of what you should do within an IRA and how you should handle it, and it's not necessarily for everybody. So we'll go through some of the pros and cons, basically, of using a checkbook control within your own IRA account, so you can, again, make the most educated decision possible. So why haven't people, and again, kind of taking a little step back here to the basics of self-direction, why haven't most people heard of self-directed IRAs? Now, everyone on this call has at least heard of self-direction, and a great deal number of more people are self-directing as well. But in total, less than 5% of individuals who have retirement accounts, who have IRAs, are self-directing. And I think the biggest reason that there aren't more people self-directing is simply the knowledge factor, that most people don't know that they have other investment options, because the IRAs, the retirement accounts they currently have, are held with a bank, they're held with a brokerage firm who's offering them a limited investment product. Stocks, bonds, mutual funds, maybe a CD or money market account at a bank, you're limited within those particular IRAs to the assets that those particular custodians will hold. IRS regulations allow for a very broad range of investments. The only exclusions are life insurance and collectibles, which we'll revisit in just a moment. So most people don't know about this because they're not going to be told by their brokerage firm that they have the ability to move money out of stocks and mutual funds and into real estate and other types of assets that we're going to talk about today, or that we've talked about in other seminars as well. It'd be similar to going to McDonald's and expecting McDonald's to tell you that you have the right, I guess, in a lack of a better term, or the ability to have tacos or to have pizza or to have a sub sandwich for lunch today. McDonald's is not going to tell you that when you walk into their establishment, that there are other options. They're instead going to expect you to choose from their menu of options. But you know that you have other options. And unfortunately, a lot of people with IRAs are just simply walking into that same restaurant every day and not knowing that there are other possibilities. The benefits of self-direction, I think we've taken client surveys over time, and certainly anecdotally talking to people as well, iterating back to us the reason why they're self-directing, a couple different reasons. One, they're looking for more diversity within their retirement account. They're tired of watching the stock market go up and down, not having any input on that, and really just looking for something else to diversify their portfolio, and not diversifying just among different types of mutual funds, but actually among different types of asset classes altogether. And for many, they'd be able to choose an investment that they understand. A lot of our clients, with the investments they're picking, they are either working in that industry, maybe say a realtor investing in real estate, or somebody who's in the insurance company buying into private stock of a new insurance company. So being able to self-direct is being able to choose something that you understand more and have a greater degree of control over as well. And along that same line, then you're able to choose kind of what return is more acceptable to you. If you think you can get a better return by investing in real estate or investing in private stock, you have that means to do it. And lastly, a lot of individuals, again, it's the wanting to be able to sleep at night, investing in something that's tangible, something they can see, something they can touch, gives them more security, and when they're looking at their retirement portfolio on a yearly basis. So the types of accounts that you can self-direct, I'm not going to go into detail about the types. If you have questions about these different types of accounts, please contact me afterwards. But any type of IRA, if you have an account with another firm currently that has a designation of an IRA, whether it's a traditional or a Roth IRA, whether it's a SEP or a simple IRA, you can certainly self-direct those funds. There's no question. It's just a matter of moving those funds, and we'll talk about in just a second on how to do that. But if you have an IRA, it can certainly be self-directed. If you have any former employer's plan, if you have an old 401k still sitting out there from years ago and used to work for a company, or if you've just left the school board and you have a 403b plan, you can roll those monies out of those plans into an IRA and then in turn self-direct it. Now, of course, it does say former employer plans on this slide. The reason being is if you're working for a company currently who's offering you that 401k, they can restrict your ability to move funds out. Now, some plans, even if you're currently employed, there's some of those plans will still allow you to do a rollover to an IRA. So it is up to you to call them and find out what those processes are, what the rules are to getting that money moved on out. So again, any type of IRA can be self-directed, certainly any type of former employer's plan. And we do have self-directed education accounts and health savings accounts as well. We don't deal with those as much, but if you have funds in those accounts, they're certainly available as well. Now, one question that we will get from time to time, the misconception either from a financial advisor or a broker talking to a client, is how you actually move money from an IRA with one of those firms to invest in a checkbook control IRA or to invest in a piece of real estate. A lot of those advisors misconstrue what you're actually looking to do. So if you go to your advisor and say, I want to invest in this particular franchise opportunity that's private, or I want to invest in a piece of real estate, they think that you're going to be taking money out of the account as a distribution, which would then be taxable to you. So a lot of people will then shy away or at least have questions about self-direction, saying, I don't want to incur any taxes. That's, again, a misconception that a lot of brokers and advisors have. When you're looking to self-direct and you set up an account in Advanta to have an IRA with us to invest in something alternative, you have money in another account with another brokerage firm. All you have to do is fill out a form called a transfer form. A transfer is a trustee-to-trustee movement of money going directly from an IRA account with another firm to your IRA account with us. It doesn't touch your hands. It goes, again, directly from one custodian to the other. And because it doesn't touch your hands, it's a non-taxable, non-reportable event. So there's no taxes due whatsoever. You can actually do transfers as often and whenever you'd like, as long as the money moves directly from one custodian to the other. Similarly, if you have money in an employer-sponsored plan like a 401k, like a 403b, you can also roll those funds out as long as, again, if it's a former employer's plan or whether your current employer allows for rollovers, allows for an in-service rollover. A rollover is simply moving money from those types of plans, again, into an IRA account. And at that point, again, it's a non-taxable, non-reportable event. So the money simply goes from your 401k into the IRA, no tax consequence to you as well. Again, if you're online, we haven't had any questions come in yet. If you have questions, please type your question or comments into the chat box on the screen. We make sure to address those as well. So again, any type of IRA can be used, and the method of simply moving that money is by doing a transfer, or in the case of an old 401k account, of doing a direct rollover. And once you've done that, you can certainly then begin investing in a lot of different types of assets. I mentioned that a lot of brokerage firms and banks will limit you to investing in only those assets that they sell, but your IRA can invest in real estate, whether you're investing in a piece of raw land or you're investing in a rental property or maybe a rehab project. Your IRA can invest into notes and other types of paper assets where your IRA may be lending money to some third party. And then in turn, your IRA is acting as a bank. They're making payments then back to your IRA account. And we have a number of other different investments as well, people investing in LLCs, which we'll talk about a little bit today, the private trust that we'll touch on as well, foreign currency trading accounts, precious metals, commodity accounts, private stock, a lot of different things that you can invest in with your IRA. Again, the brokerage firms are not going to make you aware of this, something you have to kind of find out on your own, and some of you have done that today by attending today's webinar. But the IRS rules, again, only say that the investments you cannot make are life insurance and collectibles. And collectibles would include your antiques, artwork, stamps and coins. Again, there are some coins, the precious metals, the gold and silver American Eagles that are permissible. They're actually allowable underneath the IRS rules. But the only investment restrictions the IRS places on the IRA is that you can't buy life insurance and you can't buy collectibles. Okay, again, each custodian, though, whether it's a brokerage firm or a company like Advanta, can decide what they are willing to hold. There are some things at Advanta we don't hold. We do not hold publicly traded stocks and mutual funds. We are not a broker, so we don't hold that. Likewise, those brokerage firms are not going to hold the alternative assets that you find within a self-directed IRA. Now, the other area where the IRS does place restrictions on what an IRA can do and how an IRA can make an investment is they say there are certain disqualified persons who are prohibited from transacting with or getting any type of current benefit from the assets owned within the IRA account. So if it was your IRA account and your IRA is looked at as its own distinct entity, your IRA is prohibited from transacting with yourself personally, your spouse, your parents and grandparents, your children and grandchildren, as well as any spouse of any lineal descendant as well. So your children are prohibited, as well as any your son-in-laws or your daughter-in-laws. And they also then include any business or entity that is owned or controlled by one of those parties as well. So some examples of things that would be prohibited are your IRA, again, as its own entity, transacting with a disqualified person. So if you're selling, exchanging, or leasing property, if you own a piece of real estate personally or you own it in your business, those are disqualified persons for selling that property to your IRA. Or if your IRA were to buy a property from a third party, your IRA is prohibited from leasing it to any of those individuals on the previous slide as well. You're also not allowed to lend money from your IRA to a disqualified person. And you're also not allowed to furnish any goods, services, or facilities, which we've interpreted a lot of times when we talk about real estate investing, that if your IRA owns a piece of real estate, a disqualified person cannot do the work and furnish that service to repair, rehab, or maintain that particular property. Your IRA needs to hire some third party to do it. So the key points kind of we're talking about the IRAs and what's prohibited. You can't self-deal or deal with disqualified persons, and you can't get any personal use out of the asset as well. So if your IRA was to purchase a piece of rental property, whether through an LLC or not, you cannot live in that property, use it on the weekend, or do any kind of vacationing in it. That's, again, against the IRS rules. But if you step away from the disqualified persons and you get away from trying to figure out how to do a deal with a son or daughter or parents or whatnot, there might be some ways to do it, and as well as when you try to partner up with them. That's something we can discuss in more detail if you give our office a call. It might be possible to partner with a disqualified person, but if you're dealing with a disqualified person, a lot of times not permissible. But again, that's really a small segment, a very, very, very small segment of what's possible out there when you talk about making these different types of investments. So again, a lot of our clients do invest in real estate. They lend money out of their account. They invest in private LLCs as well, and sometimes they use these LLCs to actually invest in the real estate, which is what we're going to talk about really for the remainder of the program today, and talking about checkbook control. And today's presentation was a checkbook IRA. Sometimes it's called a checkbook control IRA. It's given a couple different monikers, but the main genesis of what they are is the same. And again, as we go forward in the presentation, if you have questions, please type them in the chat box on your screen. So defining checkbook control with an IRA, I think it's first the important thing is to understand kind of how people would typically have their IRA if they did not use checkbook control, how that's administered through their custodian or through the administrator for the IRA. So if you were simply having Advanta buy and sell assets on behalf of your IRA account, we as the administrator will retain any uninvested cash you have. After you've purchased an asset, any bills that must be paid, you send us that invoice. We pay the bills at your direction. We would receive and deposit any income related to the investments into your particular IRA account. So if you have rents, interest, profits on the sale, all of that is simply coming back into the IRA that we are administering. So anytime you need money coming out of your account for an expense or a purchase, or if you have income coming back into the account from the asset, again, whether it's a mortgage payment or a rent payment, you would direct all of that activity, but all that cash would flow in and out of the IRA account, and someone in our staff will be responsible for cutting those checks or depositing that income. What checkbook control gives you is it takes a lot of those duties and places them in the control of the particular client themselves. When you set up a checkbook control, you as the client, you as the IRA owner, would have control then over that cash by using a bank account. You would have it set up, end up setting up a bank account for this particular structure that gives you the ability that when you have an expense and you have an invoice to simply write a check out of that account to pay that bill. Likewise, when you have any income generated from that particular investment, taking that check, taking that money order, depositing it right into that bank account that you have with a third party. Now, we're going to go through the process in a little more detail in just a few moments. But it's really what the difference with checkbook control is exactly kind of what it states, giving much more control to the IRA owner over making these particular investments and maintaining their account, taking it out of the administrator's hands and putting it in the client's particular hands. That is what we mean when we talk about checkbook control. We're going to go a couple different ways people get the checkbook control. The first and most common way that individuals use IRAs to get checkbook control is by using an LLC, or a limited liability company. Now, it's important, I think, just so everybody's on the same page, to talk about the terminology involved with an LLC as we go through the examples and go through the case study. So a limited liability company, when I mention a member of an LLC, I'm talking about the shareholders of the LLC, basically people who own, or people or entities that have equity. They are the owners of that particular limited liability company. When you use the term manager, we're talking about the officer, the president, basically the decision makers for the LLC, people who will actually be writing the checks and making decisions on what assets to purchase, what bills to pay, etc. And when we talk about the operating agreement, this is the document for the LLC that lists who the members are, their ownership percentage, so again, listing who the owners are and what they actually own in the LLC. When you're looking at an operating agreement, at Advanta, where you're doing one for your IRA, you have to remember the IRA cannot be a manager or a managing member. And the manager, as the decision maker, should be an actual person to sign the checks. Your IRA is an inanimate object and would not be able to sign those checks. And if you, as the IRA owner, are going to be the manager, you cannot receive any compensation. You can't pay yourself a salary or a stipend for being the manager. And you certainly can't commingle any of your funds as well. So you have to make sure that the personal money doesn't get involved in that LLC. It strictly stays as the IRA funds in that particular LLC. Now, checkbook control really came into being, really came into vogue following the Swanson case in 1996. Now, at the time, Mr. Swanson had set up a corporation to be owned by his IRA account and named himself as president. And what happened, the IRS caught wind of that and told Swanson he was engaging in a prohibited transaction because it was his IRA invested into a company that he was now going to be the manager or president of. Mr. Swanson and the IRS went to tax court, where the tax court decided that because Swanson was setting up a brand new company that had never been owned by anybody in the past, how could it then be prohibited for his IRA to invest in that structure and for him to act as president? So that kind of gave birth to the industry. And then kind of bringing us up into 2013, Mr. Ellis went before the tax court as well, and they issued a memo decision regarding Ellis, where the IRS again challenged, in this case, Ellis, for being the manager of his LLC. Mr. Ellis had set up a checkbook control structure, became the manager. Now, the thing that Ellis did that Swanson didn't do is that Ellis also decided to pay himself a salary for managing the LLC. And when the tax court decided the case, they held Mr. Ellis liable and is prohibited with his IRA account because he paid himself. But they reaffirmed Swanson, saying the fact that he was acting as a manager in itself was not a prohibited transaction. So that's kind of the background of how the checkbook control IRA or checkbook control LLC was really born. There are some companies out there that offer a one-stop shop where they will set up the IRA, the LLC, and a checkbook to get you started, but they charge $2,000 to get that arranged. If you're looking at doing this structure, many people can draft LLCs themselves. We don't require an attorney to help with the setup, but we can provide names and raise resources of attorneys and CPAs who can assist in that setup. And you'll end up paying much less than you would pay kind of some of the one-stop shop as well. The other type of checkbook control that individuals are at least getting greater control over their account a lot of times comes in the form of using a private trust. Now, many of you on the call, if not all of you, are probably familiar with trusts in our daily lives. We see revocable trusts the individuals use to pass down their belongings and their assets to their heirs. Individuals set up special needs trusts. If you have a child or a relative or someone that you want to provide care for after your death who is unable to meet their own needs, you can set up a special needs trust to provide for the care of that particular individual or individuals. People create life insurance trusts to help fund if they have a situation where they may owe estate tax upon their death. You can set up life insurance trusts that are funded to provide for the payment of estate taxes as well. So there are a lot of different types of trusts in our daily lives. We see, and a lot of real estate investors know about land trusts as well. Trusts can all have different purposes, but the general parties to each trust are the same. Whether you're setting up a revocable trust, a special needs trust, or a life insurance trust, you're going to have the same parties and the same actors in each trust. Now, the grantor of a trust is the party that contributes the assets, whether it's cash, property, anything to the trust, to then be managed by the trustee, who is the fiduciary of the account, who actually manages and oversees all of the assets in the trust. And that trustee has an obligation to the grantor and the beneficiary to perform actions in the best interests of the particular beneficiary and grantor. Now, the beneficiary is the party to a trust that ultimately receives all of the assets that are being held in the trust. So if we were looking at a revocable trust, you might have a parent who is a grantor putting the cash into the trust. They have a bank or a financial advisor act as the trustee to manage the assets. And then ultimately the beneficiary might be their children or grandchildren, who ultimately will receive the assets held in the trust. Now, when an IRA elects to invest in a trust and try to get checkbook control and getting greater control over this asset, the IRA would generally be the grantor because it's contributing the assets or cash into the trust, and the IRA is also the beneficiary because an IRA would survive your passing. When you set up an IRA account, you designate your beneficiaries and who will receive the IRA, but your IRA survives your passing. So even if you were to pass away while your IRA was invested in the trust, still ultimately all of the assets are going to come back into your particular IRA account. So if the trust were to close, again, everything returns back into the IRA. So the IRA is the grantor and the beneficiary. But you would need to select, because of the fiduciary responsibility of a trustee, you would need to select a third party, someone who is not disqualified to act as the trustee of a trust. There's not the same case law for the trust that there is for the LLC, and there is the LLC, an IRA owner can be a manager. No case law showing an IRA owner being the trustee of a private trust. So at Advanta, we require that you have a third party actually act as that trustee. The question came up and says, can my husband be a member of the LLC and I still own 100%? If we're going back to the verbiages there, what can ultimately happen is if your IRA is going to own 100% of an LLC, then your IRA is going to be the sole member. You might be able to nominate your husband as a manager, who would mean he would have the ability to write checks, but he would not have any ownership. It would still simply be your IRA owning 100%. And in your IRA documents, when you establish your account, you might list your husband as your primary beneficiary as well. So if your IRA is going to contribute all the cash into the LLC, then the IRA will be the sole member of that particular LLC. You would not be allowed to have any other members involved. But you could, again, possibly have them acting in the capacity as a manager. Again, great question. Anybody else anymore, please keep sending them into the chat box on your screen. All right, so to really illustrate checkbook control using the different methods and self-direction as well, we're going to go through a case study. It's going to be the same facts involved for each example. We're going to go through how the process is different when you're doing checkbook control versus simply having an administrator like Advanta hold that particular asset. So the case study involves Joe. Joe has some money in his traditional IRA account. He wants to buy some single-family rentals. Maybe he's going to buy multiple properties for initially. He's finding one house he can purchase for $100,000. He's going to have to spend some money and hire some individuals to do some repair work to get that property ready to rent. And then projects afterwards, after he pays all his expenses, he will net cash flow some money back into the account. So he's got the cash in the IRA. He doesn't need any type of financing. It's going to be a cash deal. How can he buy this property using the IRA? What are the different methods? Well, the first strategy we're going to go through is simply what most of our clients ultimately do, which is simply buying an IRA and having the IRA buy the property and having us at Advanta do all the record keeping administration. So the steps, if Joe decides he wants to simply buy this property and hold it in his IRA account, the first step is to open up and fund his account. He's going to complete our IRA application documents, and then we're going to do a transfer or a rollover of his funds from his other custodian. Again, we will assist him all during this entire process, getting the paperwork completed, making sure this all stays tax compliant, and we'll have an account number issued for him in less than 24 hours. So now that Joe has his account opened and has an account number, he finds the property. Again, at Advanta, we don't sell investments, and we're not going to promote any particular investments. It'll be up to Joe to find that property, and he'll notify us that he's identified a property, and we will work with Joe to make sure that the contract for that purchase of real estate is written in the name of his IRA account. So the legal buyer's name on his contract will read Advanta IRA for benefit of Joe Smith's IRA and his account number. So again, that demonstrates to the IRS that this is an asset owned under his IRA and therefore stays tax protected when monies leave the IRA to pay for the property, pay for bills, and that all of the income received is not taxed as well. So Joe will then send the contract to Advanta for us for execution. He will initial off that he's approved the contract, and we will then issue funds from his IRA to pay for any escrow or earnest money deposit to hold that property prior to closing. Now going forward, we will ask Joe to notify us who the title agent or the attorney is who's going to be handling the closing, and we will reach out to them on behalf of Joe's IRA to make sure that all of the documents, the deed, the HUD statement, any other ancillary closing documents, all are drafted in the name of his IRA account. Before we will sign any documents or send any money out of his account, we will also need Joe then to review and approve all of those closing documents as well. So Joe needs to initial off on the HUD, the deed, etc., letting us know he's approved of this particular documents. And once he has done so, we will complete the closing on behalf of his IRA by signing the documents and wiring the funds to that closing. So the property's been purchased in the IRA, so his IRA statement, if he were to look at his account online, would show that his account owns 123 Main Street, that particular property, and what was purchased for. Going forward, now that this property is owned in the IRA after closing, he would secure his tenant. Joe's going to be responsible for finding his tenant and make sure the tenant sends their rent check back to Advanta each month. We will then receive and deposit that rent into Joe's particular account. Joe will also direct that any expenses, we mentioned he's got some repairs up front to do in this particular deal. He's going to send us those contractors' invoices, eventually the annual property taxes, any other maintenance, insurance, all be paid out of Advanta from the cash held in his IRA account. So he faxes us that bill. We get a check cut out of his account within 1 or 2 business days at the most to get those bills paid. Joe can then track his activity by looking at his account online, and our system will send him automatic email notifications. That's how he knows the rents are coming in, bills are being paid. He can track all of that online and through email. So we are acting as the record keeper. Advanta is performing our functions to receive the rents, pay the bills, and keep track of all that activity. Joe does not have any direct control to send those checks in and out of his account. So ultimately, his IRA is growing through rents and profits. The cash just continues to accrue back into his IRA. He can continue to rent the property, sell it at a profit, what have you, and we're doing the administration. So we'll contrast that now. Actually, I had a question come in very quickly before we get to the next example. So will Advanta be actively involved in a closing transaction if it's in an LLC self-directed account? That question was not a plant, because that's actually leading directly into how this works when you're using an LLC and how active we're involved in that particular closing. Now, if Joe decides instead of having Advanta purchase this property inside the IRA, decides instead that he'd rather use a checkbook control LLC, this is what the process will look like, and this will answer the question that was just brought up in the chat. Same steps up front for Joe is to open up his account, transfer or rollover funds, and get an account number issued very quickly. Because Joe is now instructing us to purchase the membership in an LLC rather than the direct piece of property, the paperwork that's going to be required on our side is going to be different. Our job as the administrator is to document whatever an IRA account owns, whether it's a piece of real estate, a note, a mortgage, or in this case, it owns an LLC. So Joe's next step after he set up the account would be to get his LLC formed, choosing a name, choosing a state to set up that LLC. Whether or not he uses an attorney or CPA or some legal service to do it is up to him. But the articles Okay, the Articles of Organization are what you file with the state. It is not the operating agreement we'll talk about in a minute. So the articles you file with the state simply names who the manager is, the name of the LLC, and the address. The articles should not mention the IRA account at all. Now, the document that we need to see at Advanta, again, we need to see documentation of what the IRA owns. And remember from a few slides ago that an operating agreement for an LLC documents who the owners are. So that's the document we need to see at Advanta that shows Joe's IRA as the member. So in this case, it's just Joe's IRA. The IRA would be listed in the operating agreement as a 100% owner, and somewhere in that operating agreement it needs to show Advanta IRA for benefit of Joe Smith's IRA and his account number as the actual member in the LLC. Again, similar, we were looking at, in the previous example, we were looking at a contract and ultimately at a deed to make sure the IRA was listed because his IRA was directly buying property. But in this case, we're using the LLC. We need to see the operating agreement itself showing the IRA as the manager. Once the operating agreement has been drafted, we make sure Joe has approved it. Once Joe has approved the operating agreement, we will sign the operating agreement on behalf of the IRA account, and we can issue a check from the IRA to then fund that LLC. Joe, as the manager of the LLC, will then open up a bank account in the name of the LLC, and he can enter into, so he goes to a bank, he shows them the articles, he gets a bank account open in the LLC, then can deposit the IRA funds into that particular account. Once Joe then finds a piece of real estate, he's going to enter into contract with the buyer's name listed as the LLC. So to go back to the question we had on the chat, we are not going to be involved then going forward. Once we have sent the funds to the LLC's bank account, Advanta's kind of duties and for the particular investments are kind of over. We've invested it through the LLC. Joe now has the cash in the account. He will enter into contracts to buy real estate in the name of the LLC, and then going forward through closing, we'll be signing all the documents on behalf of the LLC in his position as manager. So Joe signs the real estate contract, signs all the closing documents. The LLC is now listed as the buyer. And going forward, all the rents from that property will go back in the LLC bank account, and the expenses get paid out of the cash in the LLC bank account, and Joe now has the ability to write the checks right out of that LLC bank account. That's why they call this checkbook control, because he now has the ability, has the checkbook there to make purchases, pay bills, and deposit all income. If Joe has extra cash sitting in that LLC bank account, he certainly could have his LLC use that cash to invest in other assets. Whether he wants to buy another piece of property, he could establish a brokerage account in the name of his LLC. He could open up CDs in the name of the LLC, all holding that under that one particular umbrella. He as a manager has that authority. So the question and answer again, will Advanta be as actively involved in the closing transaction if it's an LLC? The answer is no. I mean, you're going to be handling that as the LLC manager. One caveat to what I just said, though, if you are doing a checkbook control LLC, or in the next example, go through using a trust, and have questions on, I'm thinking of making an investment and running it by us to get our opinion on whether if it's prohibited or not, or just some potential issues we see, you're certainly welcome to call us, but we are not going to be involved in the actual closing transaction. So I mentioned you can also get checkbook control using a trust. We'll just go through very quickly what this looks like. It's very similar to using an LLC. Again, Joe's first step, opening up his account, funding his account, and then in going back again, what we need at Advanta is we need to see ownership documents. If an IRA is investing into a trust, the ownership paperwork would be the actual trust document itself. So Joe would need to have a private trust drafted listing the IRA as the grantor and the IRA as a beneficiary. So Advanta IRA for benefit of Joe Smith's IRA and his account number will show up in that trust document as the grantor and as the beneficiary. We talked about, again, the difference between, one difference between a trust and an LLC, at least one of the differences, is that Joe does have to find somebody who's not disqualified to act as the trustee itself. Another difference between the LLC and a trust is that a trust is not public record. Now, when you file for an LLC using checkbook control, you have to file articles with the state of Florida and maintain that on an annual basis. Trust documents do not have the same requirements. So again, a trust can be much more private. Similarly with the operating agreement, we're going to want Joe to review and approve the trust itself and send that copy that has been signed by the trustee and approved by him to us. We will then sign the trust on behalf of the IRA as the grantor. And then similarly, we will send a check from his account made out payable to that particular trust. And Joe's trustee would get a tax ID number for the trust and open up a bank account wherever they so choose. And his trustee, again, someone who's not disqualified, then deposits that check into a trust bank account. As far as the trust operations, Joe will now have to instruct his trustee to purchase particular assets in the name of the trust. And his trustee will be the one signing the documents, entering into contracts, and then ultimately depositing the income and paying the bill. So it's similar to an LLC in that someone else is having control over the checks other than Advanta. In this case, though, with a trust, it does have to be somebody who's not disqualified acting in that position as trustee. And again, the funds are going to go in and out of that particular account. A question came up, can an LLC buy real estate using cash for the down payment and getting a mortgage for the balance? That's probably better addressed somewhat in another seminar we would do. But typically, if your IRA, or in this case your IRA LLC, buys real estate, having the IRA put the cash down, it is possible to get a mortgage for the balance, but the rules the IRS has regarding prohibited transactions and what's disqualified would require that the mortgage that you get for the balance be a non-recourse loan back to the IRA LLC. So this is something we talk about usually in different seminars. We actually have a webinar coming up on the 11th of August that will talk about this in a little bit more detail. It is possible, but the rules prohibit you from getting a personal mortgage using your IRA cash for the down payment. So to answer your question, it's possible, but the loan has to be a non-recourse loan, which can be a much more difficult loan to get than a traditional mortgage. So your IRA makes a down payment. It can get a mortgage for the balance on a non-recourse basis and go forward purchasing the property that way. But you cannot personally guarantee any mortgage that is made to your IRA, or in this case, in your question, to your IRA LLC. Again, I hope I answered the question. If not, please contact me afterwards and get into a little bit more detail about that. Question came in, can you have more than one kind of account with Advanta, i.e. you can have an LLC and a trust? Yes, if you have an IRA with us and you have cash and you want to make different investments, you can certainly set up an LLC for some of them and set up a trust for the other. That's completely up to you. So what about partnering with your IRAs using an LLC? I mentioned a little while ago it is possible to have multiple parties to partner up on a piece of real estate. So it could be your IRA and other individuals partnering up on a deal. It's just when an IRA partners up with any other parties, the IRA has to receive its share of income and promote and also pay for any expenses as well. So if your IRA is a 25% owner as a partner, your IRA will receive 25% of income and pay for 25% of expenses as well. So if you have multiple parties, you could form an LLC that it makes it much less cumbersome, I guess, in order to manage those investments with those multiple parties. You have your IRA, your friend's IRA, somebody else's personal money. An LLC can just make it easier to do that particular transaction. And the manager of that LLC would then kind of hold all of the funds for the different investors and make investments on behalf of the LLC. If you're going to be partnering with people who are disqualified, just be very careful that when you're dealing with that you structure it correctly. Again, maybe getting an attorney or CPA involved, or at least getting some additional guidance from Advanta as well. So you can partner with your IRAs using an LLC, and we've seen many people do this as well. Question came up and says, how does the end-of-year accounting work for a Checkbook LLC account? The accountant prepares a K-1, but no taxes are actually paid since it's an IRA. Correct. Two questions. If you have a single-member LLC, so it's just your IRA account, and there is no other party involved, again, so you set up the checkbook structure, you don't have any other parties involved, it is simply your IRA. Your IRA with a checkbook control LLC, the one-member LLC, does not file a tax return. It's a disregarded entity for tax purposes. Now, if your IRA does invest into an LLC with multiple partners, your IRA would get a K-1, but you're correct that no taxes would then be paid because it's an IRA account. So end of year accounting, if it's a one-member LLC, my understanding you do not have to file a tax return because the LLC is a disregarded entity. If you have your IRA is involved in a partnership, if your IRA gets a K-1, your accountant may be preparing that K-1, but you're not actually paying any taxes. You're correct because it is an IRA LLC. Another question we'll get to more towards the end. I want to kind of keep moving. If you have money in your LLC or trust, so you have cash sitting in there, and you would like to take some of that money out to go on vacation or to buy a new car, use just for whatever personal purpose, just important to understand the flow. So you have cash in this LLC account that is owned by your IRA or a trust account. You would first need to send the money back to Advanta to deposit into your IRA as a dividend. Once that has happened, we'll deposit the cash into your IRA. You would then send us a distribution form for us to then return and send the cash back to you. We are the ones who would issue a 1099, which is the form the IRS is going to require for that distribution. So in order to keep things proper within IRS guidelines, you have to send the cash back to us first, and then we will distribute it to you personally. So it has to come from the LLC or trust account directly to us, and then we will send it back to you. If you bypass us in the middle, the IRS could argue or make a distinction that you did a prohibited transaction. So simply send it to us to avoid that issue. So pros and cons. If you're using us as the IRA administrator, so again, you're going back to the very first example where Joe bought the property in the name of his IRA, what some of the pros are that you're keeping an arm's length from the money. Okay, so you're not having direct control, and therefore you're less likely to engage in something that would be prohibited. So if you have direct control, you have that checkbook, it's easy for you to make investments. You may do something that's prohibited or not allowed under IRS rules. If you're using Advanta as the administrator, we will do our best to alert you to any issues we potentially see in the transaction. Again, that does depend on what you make us aware of. We can't read minds, but if you said, hey, can I use my IRA to make a loan to my son, we're going to say, hey, that's not permitted. That's against the rules. That's a pro of you having anything go through us. And we also keep very clear and accurate records of all activity. That is our job as a record keeper. We have scanned copies of all the checks that we deposit to the account, any bills that you have directed us to pay. We have complete and clear records of that activity if the IRS were to ever request it. Con, though, if you're using, kind of say, necessarily not a con, but if you're using Advanta to buy multiple assets, so you're directing us to purchase 2 or 3 different rental properties, we are going to have an administrative fee for each different property that we're record keeping. And if you're buying properties at auctions, you don't have the ability to simply write those checks for immediate purchases. You do have to request a check from us. It can take a day or two to get a check or a wire sent, and also make sure all the paperwork is in good order. Now, some pros and cons to the checkbook control, and a lot of this is going to be the inverse of what we were just talking about with having Advanta or Advanta do all the record keeping. If you're using the checkbook control and you have your checkbook, you have much quicker access to funds for auctions or for different purchases or to pay bills. You also can hold more assets in your account with a lower fee. We would only charge you one administrative fee to have that LLC. Even if your LLC owns several different assets, you're simply paying us one fee for that structure. So if you're doing a lot of different purchases, a lot of assets in and out, checkbook control can reduce the administrative fees you may pay. And there might be some asset protection with using an LLC or using a trust, or some anonymity. If you want to keep your name off of public record, that's another reason why people like to use LLCs and trusts, or to hide the owner. Now, if your only concern is anonymity, we can title property and omit your name from the title and simply title as Advanta IRA for benefit of and a specific account number. Now, the cons are kind of the things to keep in mind. If you're using checkbook control, you are now responsible, or your trustee, if you're using a trust, responsible for keeping very accurate records, copies of checks, bills paid, etc. If the IRS were to want to look into your IRA account, they're going to need to see, if they're using us as the administrator, we can run a report showing all of the money in, all of the money out of your account. If you're using the LLC or trust, you're going to need to have those similar records and being able to document all the money in and out of the account. Again, I mentioned it's easier to engage in something that's prohibited, and you don't have as much oversight by the IRA administrator. If you were going to engage, you're making a bunch of different investments out of your IRA using the LLC, it can be easier for you to do something that's prohibited, and certainly not intentionally, but when you forget the rules and you have the checkbook at your control, you might do something that is prohibited. I want to get back to a few of the questions. Actually, we'll go questions we had here come up in the last few minutes. If you have some more, please get them typed in. We'll be wrapping up the webinar in a few moments. If you have $100,000 in your IRA and loan it out, what happens if the loan goes bad? How can you foreclose, pay for expenses if all the money was loaned? If your loan goes bad in your IRA and it was security, there was security for that loan, like a mortgage, like a piece of real estate, your IRA certainly can foreclose. If you have cash in the IRA, pay for expenses. So your IRA would hire an attorney. Your IRA in that case is the plaintiff suing the individual who's not paying you. And we've had clients go through that process of foreclosing on the particular property. Now, if all the money was loaned out, you don't have any cash in the IRA, be up to you and your attorney if they'll accept personal payment. The other option would be if you have the ability to make your annual contribution, you can contribute each year certain amounts to your IRA account, make that contribution, and then in turn have that IRA pay your attorney. Or if you even have other IRA funds. So your IRA at Advanta may not have any cash, but you may have cash in another account, can certainly move that cash over to then pay the bill. So the process is, if your loan goes bad and you want to foreclose, is to hire an attorney and have them use your IRA as a plaintiff to take back over the property. We've had many people do this, and we can refer as well to individuals, attorneys who can help you out with that. Another question, can you partner your IRA with yourself outside of the IRA? And the answer to that is yes, and this is again a very nuanced portion of self-direction. And that if you had, say, $50,000 in your IRA and you had $50,000 cash personally, you could partner those together to make an investment of $100,000. If you do partner with your IRA in that scenario, you will want to make sure to split all income and all expenses according to that percentage of ownership. This is different from having your IRA buy something that you already own. Instead, in this case, you're having your IRA and yourself personally, both as buyers, purchase an asset from some third party. And again, if you're partnering, that can be permissible. It's different if you are having your IRA purchase or loan money to yourself in a different scenario. So if you're thinking about using some IRA funds and some personal funds, please contact us and we can let you know, kind of possibly give you some ideas on how to structure that transaction. Another question, I heard only that only self-directed 401ks can be checkbook controlled and not IRAs. And you heard that from another IRA administrator. I guess that's their opinion. Many people have been using IRAs in the way we've described it today for years to put them in through LLCs to get checkbook control. It is also possible that if you own your own business and have your own 401k plan, that you can also establish a bank account for that 401k and get checkbook control through that type of strategy as well. But in order to have a self-directed 401k and have basically a solo K, you do need to own your own business and potentially drawing salary and contributing salary back, etc. You can then get checkbook control for that 401k, but the structure we're talking about today is using whether or not you're using a 401k or an IRA, using an LLC or trust to get that. I know that there are other self-directed companies out there who don't want their clients doing the checkbook control because they're afraid of all the cons that we're seeing on this screen right here, that you might do something that's prohibited, and you're now responsible for keeping accurate records. Our position at Advanta is it is your decision as the IRA owner, and that if you want to work with an attorney, work with a CPA, get better guidance, that's completely up to you. Again, but as we illustrate in the seminar today, it's not necessary to have checkbook control. There's really some advantages to it. The reason why we did the webinar today is, again, more for education of what the different possibilities that are out there, showing you, again, what kind of accounts you can self-direct, and illustrating how you buy property using the IRA administrator versus using the checkbook control or using the checkbook IRA account. Again, there's advantages and disadvantages for doing it both ways, and ultimately it is up to you as the IRA owner to decide which way is best for you. At Advanta, we do not have a preference either way. If you tell us to buy real estate with your IRA, we will go forward on a closing process. If you instruct us instead that you want to use the Checkbook LLC, we'll ask you for the LLC documents. So we're not going to just say yay or nay either way. That is completely a decision for you as the IRA owner to make. So in deciding which option is best for you, talk with an attorney, talk with a CBA, talk with others if you wish to decide what would be best for you and kind of what you're trying to accomplish, what your main concerns are. Again, most clients do choose to simply have us hold the assets and do the record keeping. Even if it costs a little bit extra money at the end of the year, you don't have the hassle of having to keep track of all the bills, of all the income yourself. Have us do that. And it is possible to switch between the strategies later on. You may have to do deeds and assignments of assets, but you can switch from having Advanta do it to having it within the LLC, or vice versa. Again, we're not going to counsel you either way on which way to pursue. We can give you basically, as we've done today, the pros and cons of the different ways to hold these particular assets in your IRA. Now, if you're looking to get started, give us a call. If you have questions on this webinar, give us a call and follow up to find out how you get started, what the steps are, what's needed each step of the way, whether you are looking to set up and start a new self-directed account and get it funded, or whether you're somebody who already is self-directing and wants to know more about how to structure your investments in a checkbook structure or not. Give us a call. Again, our job is to educate, provide people with resources, provide people with knowledge to help you make the best educated decision as possible for your particular retirement account. We do have our next webinar. We actually have two coming up on August 11th. One will be at noon. We're going to be talking about investing in private placements with a self-directed IRA account. This is people who are looking investing in hedge funds, investing into private new startup companies. We'll be going through that webinar, kind of how that works. We're certainly not going to be promoting any particular investments or telling you where to find the investment, just going through the strategy and the process if you are looking to invest in a private placement. There will also be another webinar that evening at 9 p.m. Eastern Standard Time. We'll be talking about using an IRA to buy property and using potentially some of the leverage that we talked about today as well. So you will get a copy of today's slides in an email and also the copy to the recording. If you participated live, you'll get the recording to go back and listen to if you wish. If you're someone who wasn't able to make the live event, thank you as well for listening. We will send a copy of the slides to you in an email, and you also will be notified of these other upcoming webinars I just talked about. Again, both of them on August 11th, one at noon on private placements in an IRA, one at 9 o'clock that evening on investing using leverage as well. So I encourage you to give us a call. My name and number is on this email for you to reach out to us. Reach out to me. If you are self-directing already with us, again, appreciate you for listening and appreciate your business, and you're welcome to call your account manager who can also help you walk through this process as well. So I don't have any questions, any more further questions, and we're at our time. Again, thank you everybody very much for listening today. We look forward to talking with you further.